Hey folks, it's Rod with Power Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Also, I'm the best MJ community. It is Wednesday, June 26th. Happy hump day, and I hope you're doing well. In this video, we're going to be discussing some interesting comments that came out of a Q&A with co-founder and executive chairman Boris Jordan at Curaleaf. He was discussing global expansion and consolidation. So we're going to go over some interesting quotes from that. And then at the end, we'll bring up the Curaleaf chart and we'll take a look at the technicals on what to expect there in terms of the price action in the days, weeks, months ahead. But spoiler alert, it is looking like we could see another potential leg down. So before we get to it, make sure to smash the like. It helps support me in the channel. If you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or when I go live. As always, this is not financial advice. I'm not a financial advisor. You should never buy or sell anything based on anything that I say or write. And full disclosure, I do own Curaleaf in my portfolio. Also, you can follow us over on X, formerly Twitter. The handle for that is @GroupPow. Going to be using that as my platform of choice going forward. And just in case we ever get censored or shut off here on YouTube, we also post over on Rumble as well. This was the article from MJ Biz Daily, Global MJ Expansion and M&A. So they talk about mergers and acquisitions and consolidation in the space in this Q&A with Curaleaf chair Boris Jordan. So Massachusetts-based MJ multi-state operator Curaleaf Holdings first entered the European market in 2021 with the acquisition of EMAC Life Sciences. 2 years later, the company purchased a Portuguese MJ cultivation facility from Colombian producer Clever Leaves. Curaleaf co-founder and executive chair Boris Jordan sat down with MJ Biz Magazine at MJ Europa on Tuesday to discuss his company's evolution and what he believes is in store for the regulated MJ companies at home and abroad. So there was a couple of interesting parts of this that I'm not going to go through everything in detail, but I'll skim through it a little bit quicker here. So he said, when you founded Curaleaf in 2014, did you know you wanted to take it international? He said, 2014 was early in the U.S. industry. I don't think anybody was thinking much beyond the East Coast in the United States at that point in time. And then they started in Massachusetts, New Jersey, Maine, New York, and then we started moving ourselves further south into Florida and Maryland. Really, we didn't look at Europe until much later, but it was a natural progression because I had just moved back from Europe to the United States around 2014. And then they talk about Northern Green Canada. I've been saying for a while now that U.S. MSOs are going to become LPs and LPs will become MSOs. Look what's happening with Acreage and Canopy through that exchangeable share and Canopy USA structure. And now we have Curaleaf buying Northern Green Canada, a small operator here in Canada, but a Canadian operator nonetheless. And how did that deal come together? So they were working together. We had steady supply for indoor flower in Europe. Our partners in Germany, 420 Pharma, were working with a company called Northern Green Canada. They were importing from Canada, and we were probably buying 60% of what they had to produce. Then we started financing new grow rooms because they didn't have capital, and we realized, why are we paying a margin of 25% buying this flower when we have 60% of their demand anyway? So it made a lot of sense to buy it, essentially, and that improved their margins. And if we're putting in capital to build out facilities, we're putting capital into our own business rather than somebody else's business. So it made a lot of sense from our perspective to make that deal. And this, it'll continue, right? Once we see a few, like look at SNDL and Sunstream, you have OGI as well through its Jupiter joint venture. So that's going to be, that's going to be another huge, and then Tilray as well. That's going to be another huge market, obviously, for these LPs, and that's where everybody wants to play. That's the arena that everybody wants to play in, right? It's the big leagues, the U.S., right? So at this point, Tilray, there's been some speculation that they could potentially acquire some of MedMen's assets in the bankruptcy proceedings and creditor receivership. So we'll see what happens with regards to that. But we're already seeing the writing on the wall, and the fact is companies are starting to become multi-state operators that are in Canada, LPs into MSOs, and vice versa, right? And it's going to be a trend that continues. And we're not even in the blue chip phase, right? So there's going to be a lot of consolidation, and that's what they start to talk about here. What do you think of the future of MJ mergers and acquisitions and those activities? What do you think those look like? He said, it's probably an unpopular thing to say, but the way I see the MJ sector developing over the next 10 to 15 years. So again, a lot of these executives, right? As retail investors, we kind of need to just, when in doubt, zoom out. And I think people have a hard time seeing past their own nose sometimes, right? It's just whatever's in front of us. It's just whatever time, we're almost like just, looking at the calendar on what day it is, and we're so short-sighted, right? And Some people say like, oh, it's been 5 years, right? In over 5 years in Canada since we legalized, it's been forever. Still no improvement to excise taxes, but in the grand scheme of things, that is not a long time, right? We're still not even legal at the U.S. level, right? At the federal level. So until we see the U.S. legal at the federal level, then we're not going to see mass adoption. We're not going to see that, that blue chip phase for at least, in my opinion, 5 to 10 years after the U.S. legalizes. So you just have to remember that a lot of these companies are building for, decades out, 1 to 2 decades out, right? So he says you're probably going to have 5 to 10 large players, and that's pretty much exactly what I've been saying on the channel for the last couple of years, right? There's probably going to be 6 to 12, in my opinion, big players, and a lot of them are going to be just, companies in the US. There's going to be a lot of companies from Canada. There's going to be other companies international, right? So international companies can succeed. There's enough room in this industry for multiple players to succeed. Look at the big tech industry, right? It took decades for the real blue chips to come out of that. And just because you were first didn't mean you were last, right? Look at the pets.com. Companies just started adding .com to their names, and there was hundreds and thousands of different tech companies, but now there's, around 6 to 12 big tech companies, right? And look at the rise of Nvidia, right? I mean, you got Apple and Amazon, and they're all kind of focusing on their one core aspect of the industry, and that's what we're starting to see in MJ now, especially in Canada. We're seeing that differentiation, and a lot of the companies in the US are very similar. So I think they're going to go through a lot of the same kind of rollout that Canada did, where everybody's just trying to be everything to everybody, and then eventually you have all this overlap and companies trying to do the same thing, and then there's going to be a ton of consolidation. Boris says in the US we definitely need consolidation because the cost structure is completely out of whack because of interstate commerce issue. So companies are spending way too much money, even the big MSOs, multi-state operators. And from a global perspective, the cost structure is really, really high compared to what it could be plant-touching companies if they all came together. There's regulatory challenges to that because in the US, these companies are regulated on a state-by-state basis, and the states have to put up these anti-monopoly barriers. You can't just own, for instance, more than 3 stores in New York or 3 stores in New Jersey. You can't own more than 10 stores in Illinois. And Illinois has been absolutely ripping lately. Some states like Florida and Arizona are limited, but for the most part, particularly the East Coast states, you have these artificial barriers that are causing the industry now to have very high cost base. In Europe, it's very early stage business, but he said eventually there will be consolidation, but any consolidation, you're going to have new companies start up. It's a never ending cycle. And then he talks about greenhouses in Portugal. We're now starting to export into Germany and Poland, and Germany's looking at fast tracking Pillar 2, which is the second phase of their legalization. And that's going to bring for profit, and this is really going to help the industry move along, because as of right now, you need to have a prescription from the doctor, and it's only for that exactly what you were prescribed, right? So you can't just walk into Canna Cabana, right? And that's going to benefit the high tides of the world as well, and these retailers once they can benefit from Pillar 2. What are some of the things Europe and the U.S. can learn from each other? The U.S. needs to get its act together. 90% of the United States has access to either adult use or medical MJ, and the federal government doesn't have a single memo that recognizes this $60 billion sector between the intoxicating hemp market and the regulated MJ market. The hemp market was created through a backdoor loophole rather than through initiative to try and stimulate and regulate the MJ market. So the U.S. is just a disaster from a regulatory perspective. Every state has different rules. The federal government has no rules. It's a free-for-all. I think the approach the Europeans are taking to this is a smarter approach than what the United States did in the initial stages. In the U.S., and the U.S. is paying for it now because you've got companies that are barely alive because of the regulatory front. If this continues much longer, you're going to see a massive wave of U.S. bankruptcies in the MJ space. It's already happening. And yeah, that's what I've been saying for a while now, right? The cost structure, the cost of like these margins, yes, they're high. Yes, they're still 280E, but these margins are going to drop as we start to see, price compression and price wars. It's already happening. It's because it's illegal, right? Once it's legal, then, there's going to be those barriers are going to come down. The barrier of entry is going to go down because a lot of companies are probably reluctant to start a business because of 280E. If that goes away, then there's going to be, that's probably the biggest barrier right now from a cost perspective, right? Because it eats into your tax on the gross, not your net income, right? So once you get that traditional business benefit, where you can, write off other normal parts of your business, then that's going to increase there's just going to be a lot more people looking to get in this space, in my opinion, especially in the US, right? The US is huge. And then the Canadian operators, you have to think too. And then international operators beyond that, right? You have to think, but if the Canadian companies are starting to become MSOs, you look at, like I said, with Canopy and SNDL, Organogram, Tilray potentially looking to go into the US. So if you look at that, there's going to be fierce competition, right? And there's going to be a lot of consolidation, in my opinion. And again, just look at different MJ companies in Canada and see how differentiated they are, and then look at the U.S. companies, and a lot of them are kind of trying to be very, it's not that they're exactly the same. Maybe they're in different states and they have different licenses for different states, things like that. But at the end of the day, it's really hard to differentiate them all. A lot of them, there's a lot of overlap there. But we'll take a look at the chart. There's been a ton of daily bear flags, a lot of names and daily downtrends. We had daily oversold, potentially as the most likely scenario. I said for a while now that after a big bull move, it had been a while since we were daily oversold. And we are coming off daily oversold here now on CURA on the TSX, Toronto Stock Exchange. So there was daily bear flags across the sector. MSOS was one as well. So if you track MSOS, it tracks all of the major producers in the US. Daily bear flag, we actually hit it pretty much to the penny. 686 was the target. We hit 688. And then again, if we bring up Curaleaf, it was a similar pattern with the bear flag, and Curaleaf very heavy weighted in the MSOS ETF as well. So it's no wonder, but there's actually another daily bear flag on deck here, and it's saying we could see that at $4.70, and that's Canadian. So I think that we could potentially see another leg down here. And $5 psychological, a lot of people are probably looking to enter close to that with a stop below it. So, it's very possible that we do see that $5 psychological test and then a potential for stop loss hunting. So I wouldn't be surprised if we did dip down to around 480, 470. So essentially from current levels to the low of the day today, that would be about another 11 to 12% of downside. So not massive downside from here, but some names, if you take a look at other names in the space, some could see another 15 to 20% of downside. So I think Curaleaf might hold up as one of the better ones, but we did have a stochastic bear cross on the weekly, MACD bear cross on the weekly. We lost a 10-week moving average. So we had early heads up here all the way back. What was that? About 2 months ago, the stochastic was crossing bearish, and that it was not looking good at all. On the weekly time frame, we lost our weekly moving averages. We closed below it, so that's not a good sign. We're seeing a bull cross of the 50 and the 100 weekly, and that's only the second time in history. But as of right now, not looking too good when you're closing underneath all of those weekly moving averages, and we're below all of our daily moving averages as well, and we're very close to seeing a 50 and 200 day bear cross here, which is a death cross. So like I said, adding more confluence and adding to the probability that we could see another leg down. And again, like I said, that daily bear flag targeted of around 470. We did start the daily oversold bounce, but so far it's been a pretty weak bounce, and I would anticipate another leg down as the most likely scenario, unfortunately. And you have to think too, like the broader market is super strong right now, and if we were to see a healthy correction, 5-10% on the S&P 500, that would not bode well for these MJ stocks. So I do think that we could easily see another 10 to 20% of downside on some of these names, but we should start to recover into July and August, in my opinion, as we see the end of the comment period wrap up on July 22nd. And tomorrow is also the presidential debate. So Thursday, the 27th. So we'll see. Maybe I definitely think crypto is going to be a big focus, but let's see if they bring up MJ as well. We could get some interesting activity going into Friday when the markets open. All right, going in there. Let me know what you think of this news. And it's Rod with Powell Group. Thanks again for joining us in the Pursuit of Wealth, and we'll see you again on the next video.